Welcome to The Explainer. Today, we're diving into three huge stories that really show the tension at the very heart of fintech. We've got a Wall Street giant launching its own crypto dollar, a top exchange making a wild bet on the future of trading, and a major lender flashing a big red warning sign. So let's get right into it.
You know, when you really get down to it, this whole story is a tug of war between two massive forces shaping finance right now. On one side, you've got the incredible, world-changing promise of crypto. We're talking new payment rails, instant settlement, brand new ways to trade. And on the other side, you've got the cold, hard reality of a traditional credit cycle, with rising interest rates and a whole lot of economic uncertainty.
First up, let's talk about Fidelity. This is a traditional finance giant, and they are jumping headfirst into the world of digital dollars. And wow, is this a huge signal? It shows how the old guard is finally really embracing crypto's native infrastructure.
Okay, so to really get what Fidelity's up to, we've got to quickly talk about what a stablecoin even is. Just think of it like a digital dollar that lives on a blockchain. Its whole purpose is to hold a steady value, usually one-to-one with something like the US dollar. It's basically the bridge, right? The stable connection between the old money world and the new crypto one.
All right, so let's break down the details of this new FID. It's launching very soon, and it's built on Ethereum, which is smart because that gives it access to a massive established network. But this is the kicker. It's fully backed by the safest stuff on the planet, cash and US government debt. This is all about bringing that Wall Street level trust to the native currency of crypto.
Now, you're probably thinking, wait a minute, isn't this market already huge? I mean, you've got giants like Circle's USDC and Tether's USDT completely dominating a market worth over $300 billion. So why should we care about another one? What's the big deal with Fidelity showing up to the party?
Well, the answer is one big, powerful word: regulation. New laws, like the Genius Act, have finally created a clear rulebook. It's like a dam is broken. This has given the green light to trusted, traditional firms like Fidelity to jump into the space without worrying about a regulatory smackdown. And that, well, that could massively speed up mainstream adoption.
And here's the real takeaway. Fidelity isn't just dipping its toes in the water here. This move signals a fundamental shift. They're not just saying, hey, we're finally catching up. No, they're planting a flag. They're saying we're not just visitors here. We are going to be a foundational part of crypto's future by owning a piece of its core currency.
Okay, so that's Fidelity. Now let's shift gears and talk about Coinbase. Because while Fidelity's busy building a better crypto dollar, Coinbase is asking a totally different question. What else can we trade?
So, Coinbase is rolling out this thing called prediction markets. Now, these aren't brand new, but bringing them to a massive mainstream audience, that is. So what are they? Well, put simply, it's a way for you to literally bet on the future. You trade contracts based on whether you think something will happen or won't.
And the magic behind it is actually pretty simple and kind of beautiful. The price of a contract is a direct reflection of what the crowd believes. So if a contract that says event X will happen is trading at, say, 70 cents, the market is basically screaming, we think there's a 70% chance of this happening. It's a real-time gauge of public sentiment.
So how are they going to pull this off? Well, they've got a clear game plan. They're going nationwide, all 50 states. They're teaming up with a regulated player, Kalshi, to make sure they're fully compliant, and this is key, they are baking it right into the main Coinbase app. No side apps, no weird websites. It's right there, part of their grand vision to create an everything exchange where you can trade anything from anywhere.
This right here is Coinbase's big bet. They believe the next frontier isn't just trading assets like stocks or crypto. It's about trading the very ideas and events that shape our world. They literally want you to be able to trade your convictions about what's going to happen next. And if they pull it off, this could become an incredibly powerful tool.
Okay, now for a heavy dose of reality. While Fidelity and Coinbase are out there building the future on the crypto frontier, LendingClub just threw a bucket of cold water on the whole party, reminding us that the old rules of economics, well, they haven't gone anywhere.
So check this out. After LendingClub announced their earnings and what they think is coming next, their stock just plummeted. A solid 8% drop in after-hours trading. And a drop like that, whoa. That means investors got seriously spooked by what they heard.
So, what caused the panic? Simple. The company's own forecast for the next quarter, their reality, came in way below what Wall Street analysts were hoping for. And it's in that gap, right? The space between hope and reality, that's where investor confidence just evaporates.
And when you dig into the why, it's like a textbook case of economic stress.
Interest rates are up, so everyday people are getting squeezed. That means fewer people are looking for loans. And at the same time, it's getting tougher and more expensive for lenders to even operate. And listen, this isn't just a LendingClub problem. This is like the canary in the coal mine for the entire consumer lending industry.
So, what's the big lesson here? It's that despite all this amazing, mind-bending fintech innovation, the boring, old-school rules of credit risk, the risk that someone just can't pay back their loan, are making a huge comeback. That risk that everyone kind of forgot about? Yep, it's back, and it's whispering in every investor's ear.
All right, so we've got Fidelity, we've got Coinbase, and we've got LendingClub. 3 totally different stories, right? Let's try to pull it all together and figure out what it all means for the future of finance.
And when you lay it all out like this, the picture becomes crystal clear. You have traditional finance finally adopting crypto's tools. You've got crypto itself trying to broaden its reach into totally new markets. And then, bam, you have the hard economic reality of the credit cycle hitting everyone. You've got this explosion of innovation, but it's slamming right into the wall of fundamental economics.
Which brings us to the one massive, fascinating question that's going to define everything going forward. You have this incredible, fast-moving train of crypto innovation running on these brand new financial rails, and it is heading right towards the slow, powerful, immovable force of the economic credit cycle. So, who has the right of way? That's the question that will define the next chapter in fintech.